So hello everybody and welcome to our webinar titled Maximising Investment Property Performance in the Financial New Year. My name is Jules Kelley. I'm the Chief Operating Officer of Australian Property Investor Magazine and the Head of Sales and Marketing at AussieProperty.com. In tonight's presentation, you'll learn strategies to boost your rental income, reduce expenses, optimise tax benefits, and increase the performance of your investment property. So before we get started, unfortunately, I do have to read a disclaimer, so just bear with me for a couple of seconds. The information presented in this webinar is of a general nature and does not take into account your personal financial circumstances or objectives. Before making decisions based on this information, please consider if the information is appropriate to your individual circumstances and consult a property specialist, financial advisor, or an accountant. We do encourage questions throughout the webinar, so if you do have any, please just type them in the Q&A section and we'll endeavour to answer as many as possible at the conclusion of the presentation. So now I'd like to introduce you to our amazing presenter, George Kafantaris. I've known George for years and I can't rave about him highly enough, so we feel really privileged that he's doing this webinar for us tonight. So George is the licensee of AussieProperty.com Queensland and he's also the Managing Director of CBS Property Group. George understands that wealth creation is the primary goal of any property investor, and he's helped hundreds of clients become high net wealth landlords through his unique expertise as a chartered accountant, licensed real estate agent and qualified property investor advisor. Having reviewed thousands of property portfolios over the years and seeing how many were being mismanaged and not realising their potential, George now specialises in helping landlords create portfolios that deliver long-term growth and strong rental yields. Welcome, George.
Hi, Julie. Hi, everyone. Thank you for that humbling introduction.
Well, we'll kick off. So tell us all about end of financial year statements.
No, thank you, and thank you for everyone who's attending tonight. And besides having over 1,000 properties under management at the moment, I'm also a property investor myself. So tonight, instead of a typical webinar, I want to have it like a conversation between a bunch of mates sitting on a couch. And when you review so many portfolios, there are things that we see that we just take for granted, or we don't look at it very deeply. And one of the key topic for tonight is end financial year statements. So what I want to share with you is what are they, what's on them, and also what's not on them. And as obvious as some of these points appear to be, I'm hoping by the end of the next 30, 40 minutes, we have some more information. So by now, everybody, if you're a landlord, you should have received your end of financial year statement from your property manager. So then the question is, what do landlords actually do with their statements, right? So you've received your statement, you've got it given to you, it should have been in the first week of July, and you go, well, what do you do with it? So what do you do with your financial statement? So I'll have to go a couple more slides, Jules. So what do most people do with their statements? So you have a quick look at it, all right? And you hand it over to your accountant. Now, for those of us that are, number centric, and we want to make sure, we may pull out the previous year's financial statements, have a look at it, right? So, and then we just pass it on to the accountant, and hopefully they'll, get all that information and put it on our tax returns. So what information does the end of financial year actually show? Now, you have to remember, the end of year financial statement is just like a photograph for what's happened in the previous 12 months. It's a snapshot. And it's very difficult to look at a snapshot, a photo, and work out the whole 12 months. So if you look at what does it hold, and there's two parts basically, it's revenue and it's expenses, right? So if we look at the revenue side of the equation, there's really two main bits of revenue. It's your rent that you've received over the last 12 months. And if you've got a proactive property manager, they should be charging the tenants water consumption that's been invoiced to the tenants. So here in Queensland, the water bill comes in two components, being the water connection charges and the water consumption charges. Now, the landlord is still responsible to pay 100% of that bill, but the property manager should actually be on charging the water consumption charges back to the tenant. The tenant's got 30 days to pay for it. So the quick question is your property manager charging your tenant for the allowable water consumption, right? And this can add up to hundreds and hundreds of dollars a year. Now, some of the landlords might say, look, my property is old. You know, it's not water compliant, it's not water efficient. That doesn't matter. You get a licensed plumber there, and for, you know, relatively cheap fee, which is also tax deductible, you can actually get or make your property water compliant, and then that way you can on-charge the tenants their consumption, right? Now, if your property is not water compliant at the beginning of the lease and you make it compliant during the lease, you won't be able to charge the tenants their water consumption until the new lease starts. It's got to be in the lease. So guys, I just make sure that you just endeavour to give, if you pay for your water charges separately, get them to your landlords, because there's also a limited window of opportunity that we can actually on-charge the tenants. You can't collect 12 months worth of water charges, then give it to us at the end of the year, go, you know, charge the tenants because we may have missed that window, right? Now, on the other side of the equation is all the expenses that have been paid on behalf of the landlord, right? And look, just reading them off, it's items like your management fees, your letting fees, your relet fees, your advertising, administration fees, or now they're called technology fees, maintenance that's performed on behalf of you through the office, rates, both land and water, insurance, body corporate for those landlords that have properties within a complex, and smoke alarms, right? So they will be on your end of year statement as long as the property manager has paid them on your behalf, right? So what I want, and that's just, you know, revenue in, expenses out, and everything that is on the end of year statement will actually be recorded on your statement that's gone through the trust account, right? So then I want to start raising the question, have you ever considered what the end of financial statement does not show, right? And the quick generic answer is anything that the landlord has paid directly themselves, right? Such as your bank interest charges, your accountant's fees, depreciation is one thing that we'll talk about a little bit later, but your depreciation report, even though it's not a cash expense, it is an expense that you can claim on your tax return. Any insurance, any rates, body corporate, if you've got land tax, if you're a multiple holder, anything that has been paid by you directly and it has not been paid by the property manager will not show on your end of year statement, right? So what I want to do, and that's what I've said so far at the moment, it's basic. It sounds basic. And, you know, we hope that landlords, because everyone is busy, we hope that landlords aren't doing, you know, shoebox accounting, where they put all of their receipts in the shoebox and they hope that the accountant, you know, records everything at the end of the year. Unfortunately, it still happens. But when I look at portfolios and I get given, you know, this is from properties we don't manage, and I'm asked to review a portfolio and they give me their end of year statement. For the first thing, what the end of year statement does not show the previous end of year statement. So you can't compare all the expenses and revenue for this year compared to the revenue expenses for last year, right? And hopefully your accountant does that and they can highlight some of the things. But as an investor myself, and Jules, we live and breathe property every day. I want to talk about 5 other things that I look at when I am talking to potential landlords to come across and join our services. The first one is rent, right? So even though rent, you might go, George, well, you mentioned before that rent was actually recorded on the statement. And it is. It's the very first thing that's on the line, right? But what it doesn't show is if the maximum amount of rent was charged throughout the whole year. Now, depending on where your property is, the rental increases that we are seeing through this office on a change of lease, and it could be a change of lease to a new tenant or also in between tenancies. And I'll talk about new legislation changes in a minute. So what I want to ask all the investors is, was the maximum amount of rent for your property achieved? Because I find it so upsetting and disheartening that when I go back to the rental history of the property, that some properties have received a $20 or $30 or $40 rental increase when they could have received maybe $100. Some of our properties that we're managing on behalf of our landlords are getting between there's a nice little poll for everyone to answer. So, and please guys, anyone who answers the polls will get back. So it's amazing we see the responses, we can see the responses live, but we're seeing some properties being released at $100 to $200 a week increase in between leases, right? So there are whole things about how do you maximize your rent? Now, we've got legislation changes, and what I find is so unfair is that the rental increases that we can charge are not in alignment with interest increases through the RBA and the local banks, right? So a lot of landlords go, I just can't afford to keep this anymore. Could you please, increase the rent? Now, in Queensland, we had legislation changes where you can only do one rental increase to the same tenant for 12 months. But now, and property managers worked around that and they had shorter leases and we're getting tenants out, in 6 months. So you didn't have to go the full 12 months. What we then found, Julie, was legislation changed again, and they're now only allowing us to do one rental increase per the property. It's got nothing to do anymore with the tenant. So when we advertise a property for lease, we are being randomly audited by the RTA, the Residential Tenancies Authority Act, to make sure they go, okay, Mr. CBS, we've seen this property for rent. Please show us the previous lease and how long that was in play for. So with rental increases that are becoming more difficult to increase, make sure that the increase you do get is right. And Julie, we've seen through some of our services that we provide, we'll talk about those at the end of this webinar, that a lot of properties are under rented, right?
How do you, and we see this all the time, where we'll get new clients on board and they think they're getting the maximum rent, but how can they be confident that their current property manager is maximising what their rent should be, or giving them truthful information?
What you're going to do, and they go, well, how do you maximise the rent? Now, first of all, you do what you call your CMA, your comparable market analysis, and if you've got a large rent roll, right, what your comparable properties are renting for, right? So, there's another question I want to answer as well that's just come through, right? So if the trick, the common sense approach to maximising your rent is starting the advertising process early, right? So you see some properties that are being advertised 1 to 2 weeks out before the lease end date, right? But you should be advertising your properties 8 to 10 weeks out before the lease end date, right? So that way you can start with a cheeky price, right? And if you're attracting the tenants, fantastic. If not, you've got room to move. Because obviously, and this is, I know what the next point is, you've got to maximise rent increases, but not at the expense of vacancy, right? So we want to minimise vacancy, but increase rent because it's overall together. One of the questions that just come through is what happens if the tenant moves out? So if the tenant breaks lease, we're still confined now with not being able to increase the rent on that property if there's been a rental increase for that property in the last 12 months, right? So it's property specific now, not rental, not tenant specific. Right, so the question I'm posing to everyone here, have you received the maximum amount of rent for your property? And if you believe you have, great. If you believe you haven't, then the question you should be asking or monitoring is when did the property manager contact you, the landlord, about when, what are your intent with the property? Because you've always got to speak to the landlord first before the end of the lease because they might want to sell the property. They might want to move into it. They might have family that wants to move into it. If the landlord says, yes, we're keeping it, we want to release it, then you go back to the existing tenant and you start the whole process. But guys, start 10 weeks out, not 10 days out. Does that make sense, Julie?
Yeah, absolutely. And just a little tidbit of advice is you do when you're asking, landlords are asking for an appraisal, you want to see evidence of other properties. So that's we see far too common. They're just given an answer. You want comparable properties on that report. And if they're not, question it.
Yeah, and even going a little bit further, because what you did was 100% right. You want comparable properties, but then it's just not a 4-bedroom, 2-bathroom, 2-car house, but because you also want to know, well, are all of my rooms air conditioned compared to the comparable that might only have the bedroom and the living room air conditioned, right? Have I got security screens on mine where yours hasn't, right? So some of these features may not increase the rent, but it may decrease the vacancy. So what we're looking at today is overall yield generation. And the aim is to try and get all of these right, not just one of these right? So you want 100% comparables and in a timely manner. So what else does impact on your yield? And I've already led into this, and it's vacancy. Now, I've got the poll here. Can I actually take the poll off my screen?
You can minimize that.
I can minimize that for the next one. So, guys, the other important thing is vacancy, right? And vacancy throughout the year is not shown on your statement. It doesn't show that your property was vacant for 5 weeks or 3 weeks or 2 weeks or 1 day or no vacancy, right? That's not shown because all you're going to look at is your rental amount, right? So then when you're looking at your portfolio and depending on how intense you look at it, has there been vacancy throughout the year? And if there has, ask yourself the question, why has there been? Now, of course, tenants move, right? But there's a lot of systems that we can use behind the scenes to minimise vacancy. And then the way you minimise vacancy is if the tenant is moving out, going back to what I said a little bit earlier, you actually start the advertising process early, right? Now, there's also what time of the year are you renting it? And then because there are busier times throughout the year, then, and obviously the busier times in the year are December, January. and around July. That doesn't mean you're not going to lease the property at other times of the year, but it means be really pedantic on how your property manager is leasing your property, right? And then also what's important is the lease end dates, right? So if you're signing a 12-month lease, it doesn't have to be exactly 12 months, right? It can be 12 months and 3 days, 12 months and 5 days. So as long as your lease expires on what we call not a dead date, because there's going to be time lapse in between. So the worst time is weekends, because, you know, you can't, if you're starting a lease on a weekend or finishing the lease on a weekend, it's not the most optimum line. So you want to also make sure that your lease has got dates where people can move in or people can move out. We can do what they call the exit report. We want to make sure that the property has been left in the same state it was received. Is it clean? Is it tidy? Of course, subject to fair wear and tear, right? And then, you know, when does the new lease start? Now, the optimum is to try and release the property to the existing tenant, because that guarantees you zero vacancy, all right? And Julie, what the mathematics is should you, when we're talking about optimising rent, but if the existing tenant is going to stay, even if you think you could have achieved $10 more, but you decide not to charge it, you're ahead. Because that $10 is only $500. But if you have 1 or 2 weeks vacancy, you then got advertising costs, then got reletting fees, you might have a bit of maintenance to do in the middle, you could be $2,000 difference than rather keeping the existing tenant happy, right? So that's what about, you know, vacancy is one of the big ones. Now,
and sorry, with the repairs and maintenance as well, is that something your property manager should be advising you from, and, you know, giving you an indication of how much, you know, that might cost you, and getting the work booked as soon as the property is vacant?
Look, 100%. And I've got a whole section on maintenance in a couple of points' time. So I'll actually answer that question in that same section if I can, right? But maintenance is a huge one. The next one, guys, so we said we'll say 5 things, but, you know, point number 3 is your routine inspections. So every property manager does a different number of routine inspections for your property. Some say you want it every 3 months, some say 6 months, some say I'll do it 3 months, and then depending on what I find, will then dictate whether I do it in 3 months' time or 6 months' time, right? But your end of financial year statement doesn't show any of that. Ask your property managers this question: are the routine inspections being done in-house, or are they being outsourced to inspection companies that don't know your property, right? So there's inspection companies out there that property managers use, and all they do is go around and do inspections, but they're actually got nothing to do with your company that you've engaged in your property managers. All of our work is done in-house, and we actually don't even use any virtual assistants overseas. We do everything in-house. So when you do get your routine inspections, what is the quality of the report like, right? So, and is the report actually meaningful? Is it self-explanatory? Or are you just getting a picture of a wall, a little dent in it, but then you've got no idea where that wall is, right? No idea whether that dent was there last routine inspection, and no idea whether you should or giving you any cost to rectify it. Now, a dent on the wall is small, all right? So we want to make sure that you've got quality routine inspections provided all the time. Now, were there any recommendations post the routine inspection? So did they give you, and we'll talk about maintenance in a second, or did the property even fail to meet minimum housing standards, right? So these are the things that you should get. And one of the other things you should look at is the time difference between when the routine inspection was done compared to when you received the report. So we see some managers, going out there and doing 15 to 20 inspections a day, but they don't have the time to write the report or respond to you. So I'm actually quite happy with the, there's less than half of the people that are saying it's very responsive. Julie, can everybody see the results of these questions or only us?
I'm not sure, to be honest with you.
So
I think everyone can see them.
Oh, great. So the question was right to how responsive is your property manager? Now, property managers, since the question's about property managers, I'll talk about property managers because it just fits in here. It's a tough gig, guys. So, and people say, look, there's change within the industry of property managers, and there is, because a lot of property managers are being, I won't use the word abused, but they're dealing with landlords. And not all landlords are lovely all the time because they've got their own stresses. They're dealing with tenants. They're dealing with difficult trades that they can't get hold of. And what we're finding is a lot of property managers, there's an unprecedented amount in the industry Australia-wide that are leaving the industry. They're no longer leaving to go from one agency to another, but they're actually leaving the industry. And so you've got to make sure, is there a key person that you can speak to, in the property management area? Do you know who the director is? Do you know who the office manager is? So, are you dealing with an email that says PM1 at XYZ Realty, and you really got no idea who you're talking to? And there's a great question there that's come up. Do you as the landlord know who is responsible for your property, who owns the business? And do you have their mobile? Do you have their email? Can you ring them after hours with your spouse? Because that's where it is. Right. Now, routine inspection, guys, is pivotal because that's your eyes to your property throughout the year, right? So if you can, guys, ask the question. Could I please be given the owner of the business's name and email address, and see how friendly are they giving it to you? Because they're the ones that are ultimately looking after your property. Julie, we'll log on to, we'll talk about maintenance now, because that's something you brought up a few minutes ago. Now, guys, maintenance. So your end of financial year statement, as we previously said, shows the maintenance that has been done and paid for through the property management office. It does not show whether you've done any on your own, right? But it also does not show, is this maintenance part of an ongoing issue, right? Have I already paid for these things before, right? Now, tradespeople are getting very, very difficult to get, and they're also becoming very, very expensive just for a call out. And the call-out fees became super expensive years ago when there was more do-it-yourself programs at home, right? And then so people thought, I'll get a tradesperson, then they can give me a few ideas, then I'll go to Bunnings and do it myself, right? So when you're looking at your end-of-year statement, consider, is it part of a bigger issue with your maintenance? And depending on what the issue is, your property manager will also say to you, hey, Mr. Landlord, Mrs. Landlord, we've got an issue with your dishwasher. Now, a call-out fee traditionally is XYZ, right? Or we can actually get you a new dishwasher for the price of Y. Now, before any of that is done, the property manager should know whether any appliance is still under warranty, right? So it's too easy to call out someone to fix your dishwasher or air conditioning. It doesn't matter what it is, but maybe it was under warranty and it shouldn't have been charged for in the first place. Or if it's older and it's out of warranty, is it actually more beneficial to you to go and buy a new appliance rather
Yeah, I just wondering, can you give any examples of the type of repairs that you see that come through that should be covered by body corporate?
Yeah, 100%. So the easiest way to think about this is with body corporate, everything that is inside your front door is your responsibility, and everything that's outside your front door is the body corporate responsibility, right? Now that's a generic throwaway comment, but we've got a situation right now where we've taken over a property from, I won't mention who, where the body corporate organised the building to be cleaned through pressure washer, right? Now, water has got into the building, the apartment, sorry, and has flooded all of the floorboards where the floorboards need to be replaced, right? So this landlord has come to me because he cannot get any happiness with his now ex-property managers. And then the property manager said, well, we don't know how the water got in there. It's not a body corporate's issue. It's not the contractor's issue. It's your issue. Just go and get new floorboards. And he's going, no, because I didn't wet them. So what this property manager had done has gone back to a few previous routine inspections and said, these tenants, every time we've done a routine inspection, have left the doors open. So we are assuming that the doors must have been left open in this case as well. So even though, and I'll contradict what I just said, this damage is inside the apartment, but it's who caused it, what caused it, right? So with, and especially when you've got joining walls, you've got hallways, you might have carpet that's right outside your apartment that's been damaged. I'm not talking about pets in this case, whether or not, damage has been caused by a pet outside your apartment, but they're blaming you. So it's the easier way to remember. If it's outside your front door, it should be body corporate costs. If it's inside, it should be, your own cost. But we're dealing with another issue, Julie, where there was torrential rain. We knew that there was rain that leaked through the outside of the wall to inside and ruined the paint, and it damaged all of the white curtains and drapes. And the body corporate saying, well, the damage is inside, but how did it get inside? So don't always just accept what you've been told because we're all busy, you want it off your list, right? And it's little things. It's even when there's maintenance, if there's a townhouse complex and you've got your own little garden that might be right outside your property. But the question is it on common property or is it on your property, right? Yep. So
now we see this often with driveways, common driveways. Is it a shared responsibility? Is it a responsibility of the owners? And just the other little a tip of advice that I would give, more so from the buyer's agency side of things, with what we see is, before you purchase an investment property, have a look at things like the AGM, the 7 to 10 year maintenance plan, and see if there's any insurance claims as well, because that can give you some good clues as to the state of the property, if it's being looked after properly. And if the strata company is good as well.
Yeah, and 100%. And look at also how much money is in the sinking fund.
Yeah.
Right. So because if they've been spending money and there's a large expense to come, you may be asked for additional sinking fund fees. So it's and also conversely, there could be things in the common area that they try and charge you, even though it's in the common area. So car parks are horrendous for that. So if you've got a tenant and there's been, oil leaks from their car and then they move out, well, who's responsible for that oil leak, right? So even though it's a common area, first thing is you charge the tenant for it, right? But you never want a body corporate. And the sad thing is most body corporate companies never visit the complex, right? So you have to understand what is your role of your property manager, right? So maintenance is one of those ones, Jules, and anyone I speak to around the country, not just in Queensland, is that getting good, qualified, reliable tradespeople is getting harder and harder. There's no question about that.
Yeah.
All right. Hey guys, one more little nugget, and it's about our favourite one, interest. And as we said before, interest and interest rate increases are not in alignment with rental increases, right? And that's just the way it is, unfortunately. And what's really sad is when I'm seeing people buying property off the plan, and when they did the mathematics, 3 years ago, and they said we can afford this, interest was very, very different to what it is today. Right, so then they go, hey, George, I need an extra $300 a week rent to cover my interest. And it doesn't always work like that. Now, interest is not shown on your end of financial year statement, but is there any way that your property manager can reduce your interest payments? Now, I'm not going to say about your interest rates because, Julie, the Aussie property and the SMATS team have got their own team of specialists who could always do a rate review for everybody that's listening, right? Yeah. But I'm talking about the actual amount of interest that is being paid. Can your property manager help you reduce that? And the answer is yes, by dispersing more regularly, right? So one of the first questions that I always ask an incoming landlord that have got properties with other agents, I go to them, hey, listen, can I just ask you a question? How often and I use my words very carefully, how often does your property manager disperse your rent to you? It's not my rent, it's your rent, right? So the most common answer, and I'd love to see it here on the poll that's just been dispersed, is weekly, fortnightly, twice monthly, or monthly. And you can see at the moment, Julie, we've got an overwhelming response of monthly. Now, as a business owner, I understand that, because as a business owner, it takes a lot of time, and the bank fees that we pay on disbursements is ridiculous. Guys, it's no good having your rent dispersed weekly or more frequently than monthly if you're not putting that in an account that can actually minimize your interest. So, you know, speak to your advisor, speak to Julie, speak to the SMATS team, and, you know, set up if you put it into your loan account, you can actually pull it out again. But you might have a loan account, a miser account, you know, an overdraft account, where all of these, you can put your money in and have the exact amount of interest reduced. So what the amount of debt is lower. You've got to be proactive in your investment, even if you want to do it passively. There are still 5 easy things that we've discussed today that can actually save you, you know, hundreds, if not thousands of dollars of changes to your yield on a yearly basis, not a monthly basis. Anyway, I know I can talk too much because I do. And I just want to share with you what the end of year statement does not show. Guys, it does not show you the value of your property. Has it increased last year? Has it decreased? Has it stayed the same? Can you add any property to it? What's your equity? It doesn't show you that. It doesn't show you your yield, right? It doesn't show you if you're achieving the benefits of why you bought it in the first place. Now, every landlord should know, does this particular property or properties fit into why I've invested in the first place? So have you invested in a brand new property so you can get depreciation? You know, have you invested in an older property closer into the city because, you know, you want to have more growth, but at the expense of yield, right? Have you bought off the plan and hope that it will, you know, increase substantially by the time it's time for settlement, right? But each landlord should know why they've bought that property, and does it fit into their portfolio, or if it fitted into their portfolio at the time of purchasing it, does it still fit part of your portfolio now?
Yeah. And I think that's the question. Again, you know, coming into property investment, it's being really clear on what your objectives are and what your strategy is. But it's easy to purchase something and not revisit that question, you know, for 5 years or 10 years. And it's really important to come back to that question, have a look at all facets of how that property is performing on an annual basis. And making sure whoever is providing that portfolio review is qualified to do so.
100%. And even with some of the older properties, people go to us, oh, it's too old to get depreciation. No, let the quantity surveyors worry about that, right? One of the things that I haven't discussed in here, but I know it always comes up as a question, one of the ways to increase yield is by asking your property manager to decrease their management fees, right? So what we get, and we do a lot of secret shopping, is to find out what our competitors are charging, and it's not McDonald's. So what we're trying to do, Julie, with, you know, this is the first of a many set of series of webinars we'll be doing, is to make the property management industry, which is non-transparent, more transparent. So yes, if everything I've said today is 100% equal, and you get, you know, a 1% or a 0.5% reduction in property management fees, yeah, you can add another couple of dollars to your yield, right? But if you're going for someone that's cheap, but they've got less rental increases, they've got greater vacancy, they disperse once a month, it's silly maths. It doesn't work, right? So there's 5 quick tips of how you can actively look at your portfolio. I know that we're offering everyone who is listening today to review their portfolio. But before we wrap up, Jules, are there any questions or anything else you want to talk about the services we actually do provide?
Yeah, so many of you will be new to AussieProperty.com, but we do provide a full suite of real estate services. So, your standard real estate services, your buying, your selling, your property management, your rentals. But we do provide portfolio reviews. We are linked to the SMATS group of companies. So we also provide taxation services, free initial tax consults. We provide free mortgage reviews. We have buyer's agency services as well. So again, it's just another specialist set of eyes if you're wanting that portfolio review or you're looking at buying another investment, or whether it's time to clear out some property. We provide off the plan sales. We've got access to house and land stock. We do project marketing, property development, and of course, we will always provide free sales and rental appraisals. And it's a good idea to do that once a year as well. To compare your property to other comparable properties and see where the value of your property sits. So, if you would like to book any of our services, learn more about any of our real estate services, or book a free portfolio review, you can do so by placing an inquiry through AussieProperty.com, or you can email me directly at julie@AussieProperty.com. So just wrapping up, I'd like to thank you first, George, for a really insightful presentation. Amazing insight that you've got, and lots of knowledge and experience. Thanks everyone for sending through questions. So we'll start the questions. George, is it easy to switch property managers during your lease agreement?
Yeah, look, it's a very common question, and this is a 2-part question. So swapping property managers is easy, right? So in Queensland, you have to have what they call a Form 6 to be signed, and every Form 6 gives either party, either the landlord or the property manager, the ability to actually terminate the contract within 30 days of written notice. So if you ever wanted to swap property managers, you fill out a Form 6 with the new property manager, and then the new property manager actually contacts and sends an email to your current property manager and you're CC'd into that email that their services have been terminated. The new pickup date will be 30 days of the date you've signed it, and the new property manager will then go to the old property manager and pick up all of the keys, remotes. They should have everything emailed to them. What I find fascinating, Julie, is that the amount of properties that we're blessed in managing and privileged in managing, very few ex-property managers actually contact the landlords and go, "Oh, hi, I hear you've terminated our services. Can I please ask you why?" And you would think that'd be the first thing they do, but most don't, because you're a number in their system, right? So it's easy, guys, to swap property managers. And I suppose the next question, because I've seen it come through our system, is when should you swap property managers if you believe you want to change property managers? Right? I saw that come up on our system, Jules, on the side screen. And the answer is not at the end of the lease, right? So people go, "Oh, mate, I'll wait till the end of the lease and then I'll ask you to change it." No, that's the worst time, because 3 months before the end of the lease, the only focus that your property should be having, and we spoke about this earlier, is starting the advertising process to maximise your next yield, right? And your next rental increase. Because if you terminate the current property manager within that 2.5 to 3 month mark, they're not going to focus on increasing your rent because they know that they've lost the management, but your new property manager can't do anything until they take over the management. So guys, if you're thinking of switching property managers, please, please, please do not align it with the end of the lease.
Beautiful. Another question, will switching to an agency with the lowest property management fees boost my yields?
No, not at all. So that's if everything was 100% equal, then yes. So if every property manager gave the exact same service and the exact same intensity to your property, then yes, you might get an extra $3 or $4 a week, which is, $7 a week, which is the price of a cup of coffee. So if everything is equal, yes, it will reduce your fees, therefore increase your yield. But I can tell you now, with the number of properties we've got under management and the portfolio that I've reviewed, cheap fees mean that they really can't afford to pay their property managers because you're not getting the revenue, right? Then there's high turnover and there's a lot less love in your property. So guys, if you're shopping for the cheapest fees, please think of the topics we've discussed earlier today.
Next question, in your experience, are short-term lease agreements profitable and do they offset vacancy periods?
Look, it's a good question, right? And prior to all these legislation changes, the answer could have been yes, depending on supply and demand of your property type at the time of year. So a lot of people would go, look, let's do 6-month leases, right? And just change it over 6 months, right? Now, and then increase the rent every 6 months, right? But we've now got legislation changes in Queensland where we can only increase the rent per property, not per lease for a 12-month period, right? And you also want to make sure that you're taking into consideration vacancy, advertising costs, letting fees, and any maintenance that might be done in the middle, right? So now, when you say short-term, Jules, you're talking about 6 months, you're not talking about Airbnb.
Both.
Right. Airbnb, guys, is another mammoth, topic that we probably won't have time for today. But the problem that I see with Airbnb is that the income is erratic, right? So, and then the management fees can be as high as 20 to 25%. And most people that want to do Airbnb, especially if they're up and down the coast, they personally want to use the property at the busiest time of the year. So I'm not saying that Airbnb does not work. I'm saying it takes a different mindset to actually have Airbnb because your interest repayments are linear where your income is very varied.
Yeah, and that all comes back again to that strategy, choosing the right property, and really concentrating on things like, the wear and tear to the property, which can be mammoth with those Airbnbs. Have another question here. Can I charge water consumption to a tenant in a strata complex where the water bill is based on shared percentage of the total meter reading?
No. Right. So sorry to say, guys, unless your property is individually metered, right? So what your property manager should be doing is putting a artificial rental amount, a weekly rental amount of water into the lease, right? So you might go, hey guys, the weekly rent is this, and you just might up it another $20 for water consumption because you cannot actually charge it, and you let the tenant know that in advance, right? So go, look, we would charge normally, but because we got shared water, we'll be charging $15 a week, $20 a week, right? And that also goes to, we talked about maintenance before, and I'm jumping topics, that if you've got a pool, as an example, you may want to go pool maintenance included, but you increase the rent, because I know most tenants will not look after a pool. They'll use it, but they won't look after it. So you actually incorporate that into the weekly rent that can be done. Jules, some more questions? And I love the poll that we've just seen here. Nothing surprises me, by the way.
Concealed pipes. So if you've got damaged or burst concealed pipes, and we've seen that a lot in WA with some plumbing issues over here, whose responsibility is that? Is it body corporate or is it the owner?
All right, it depends what's caused the concealed pipes and what's gone down there, right? And I've seen some horrible, horrible things flush down the toilet, right? And then, and look, it's one of the, I've ended up in QCAT, our Queensland Civil Administration Court, a number of times with things flushed down the toilet, right? And if it's a building, if it's remnants of a building, so there's cement and there's dust from the original build, and cameras can see that, right? It's going to be the body corporate. If it's an older complex and you can see tree roots going through burst pipes, then it's going to be body corporate. This is if it's in the complex, of course. If it's your house that's happened to, then it's your cost, right? But if it's something that the tenant has put in there that has caused the blockage, you're going to end up in QCAT because it's grey. It is so grey. Jules, one of the other questions that I can see is that should you sell your property tenanted, right?
Yeah.
The answer is no, right? Because when you're selling your property tenanted, you're selling it to a landlord, and a landlord will buy that property with their calculator, not with what the maximum price is. So before you enter into a new agreement, think about your long-term effects over the next 12 months, right? So we've sold a number of properties that have been tenanted, but we're able to get the tenant to break their lease amicably, so we could actually, try and maximise the price for the landlord by opening up that property to the owner-occupier market as well. So don't just try and sell it tenanted because you are limiting your market.
So this question here, if you purchased a property and you have done repairs, maintenance, renovations on the property, your intention is to rent that property out, can you claim that back? Is that part of the depreciation schedule?
Yeah, look, it's one of those questions. Yeah, it depends on what the repair is. So if you went and changed your roof, right, because you needed your roof, then that's not a repair. That's a capital item, right? And that will be added on to your depreciation report, and that'll be added to your cost base of your asset, right? Where if you repaired a couple of broken tiles on the roof, then that will be repairs, and that will be on your maintenance, and that will be on your end of your financial statement. But if there's any major repairs you want to do, I would talk to your accountant first to see if you're unsure whether it's going to be a capital item or the ability to write it off immediately.
Another question here, if a tenant breaks the lease, is the landlord expected to pay advertising fees, technology again, leasing fees? Right. Or can you charge this to the tenant?
Depending on what you've put it on the lease agreement. So with us, every lease has got, if the tenant breaks the lease, then the tenant is responsible for the advertising and until you rent the property. Now, previously, you would advertise the property because you have to at the same price that the current tenant's lease was at, right? You can't go, well, they've broken the lease, the current lease was $500, I'm now going to charge $750. Or if you've been slow in getting that property to the market and you knew that the tenant was going to break the lease and you did not, if you can't prove to the QCAT, the Queensland Civil Administration Tribunal, that you did everything you can to minimise the tenant's exposure, right, you may lose. So when there's a break lease, you've got to be proactive. And yes, the tenant is responsible for the advertising and for any vacancy that's fair.
Beautiful. That's a wrap. We've answered all the questions. I want to thank everyone for attending. I want to thank you, George.
No, thank you,
Always
everybody.
love your presentations and insight. And yeah, again, if you've got any queries, please email us or send through an inquiry on the website. Have a lovely evening.
I want to thank everybody. Thank you kindly.
Thank you. Bye.